Hey everyone, welcome back to the channel. My name is George. I'm here with Franco. It's Monday. We have news today. We had a pretty interesting week last week with quite a bit of news. We had Fed funds and NFP, non-farm payroll. We had quite an interesting week to finish off quite a few weeks of down days. But this week in the news, we don't have very much going on today. Mostly yellow folders, wholesale inventories today at 10 a.m. And later on in the week, we have a few members speaking from the FOMC on Tuesday at 1 p.m. and 3 p.m. And on Wednesday, we have CPI month over month. So that'll be the big news on the week at 8:30 a.m. on Wednesday, followed by PPI on Thursday, and Friday we don't have too much going on. Consumer sentiment at 10 a.m. on Friday, so the big news will be this week on Wednesday with core CPI. Looking at the charts overnight, the ES, NQ, the Russell, and the YM are all down in the overnight quite a bit. We have the VIX dropping as well over the last few hours, but it's actually up. It's up since Friday's close. This line here, the dotted line on all of these charts, is the close from the previous day. So, in gold is down, oil is down, the dollar is right around there. It broke down, but it's back up. But for the most part, everything is down in the overnight, following a week of down and following weeks of down days and down weeks. And with that, Franco, you ready to take over?
Yeah.
I give you Franco.
Hey, good morning, guys. Welcome to the channel. Please subscribe if you like the content that we're making here. That will help us on the algo on YouTube, so we can grow this channel. What I do every day is that I like to assess what the overnight session was, and the way I do it is mostly with currencies and commodities to see how the equity markets can behave for the day, for the trading session. And I'm gonna show you guys what I do every day here. There you go. Alright, so I like to write, right? I like to type whatever I see in the market, so I can be aware of what happened later in the day, and then I can review if my, I don't want to say prediction, but my assessment of the markets were correct, right? And this is a work of pretty much trial and error, because it's very personal. So what it has worked for me is, alright, I'm gonna try to see patterns, try to see correlations, and indeed the currencies give me a lot of clues of what could happen during the trading session. And I've gained some experience in this regard, so I sometimes I'm like a bit intuitive because I've done it so many times, but with practice you can consciously build up like a database or data, so you can say, alright, if these and these are behaving this way, so the market might do this, right? That's not like a true statement every day. Like every day is different in the markets, right? So for today's trading day, we have the dollar went up during London session, right? During London Open, but it has been dropping since 5 a.m. So one one important thing that I need to pay attention to that is the dollar, because the dollar is not trending. I mean, it's trending up on the daily chart, but not today. It went up. It's not a real trend, right? So it's been sideways. Now it's been sideways after it has gone up for several days. So nothing goes up or down for several days without, a pause. So I think the dollar needs to breathe a little bit. The dollar going up is not very good for us by definition as a country, as an economy. So and also there are a lot of foreign countries, like other countries that has their debt denominated in U.S. dollar. And if the U.S. dollar gets stronger, it gets more difficult for them to acquire dollars to pay that debt. And that is not good for the world economy. So nothing going up non-stop is very good. The yen is neutral today, but it's gaining some strength against the US dollar. The euro is very strong today, and bonds are, when I say bonds, I'm talking about the US government bonds, 30 years and the 10 years. I do like to follow the 10 years better. I think is the one that has a higher volume, is the most rated of the bonds, right? CL was dropping, and I did this like 20 minutes ago, so it's better if we take a look at this. Yeah, it's dropping, but it's in a bullish environment, right? So I could expect this chart to turn around today. We'll go to the 5-minute. It is in an area of conflicting buyers and sellers, so we will see what happens in this area, right? Coming back to the one note, I have metals down. Metals down and the dollar dropping also is something that is not coherent, right? Because commodities are priced in dollars. So I want to see, when the dollar is going up, I want to see a commodity price to go down, because the market is discounting the strength of the dollar. And the opposite is true also, right? So I'm typing not coherent with USD move. And what this means to me is that, alright, either the dollar or metals are going to change today. Then I have a watch list. It's very volatile today to the short side. And the 10-year yield is at 314. It's been going up big time, and before 5 a.m. today was at 320. So I think that's what is making the market freak out. The 10-year yield is going up too fast. Alright, so the market is open, right? I could continue, speaking about this later during the day. We don't have a high impact news today. We have these employment trends and wholesale inventories. This is a very sensitive number for inflation, and I can talk about that later too. So I'm gonna switch my chart to NQ, which is the one that I trade. I do trade the RTY also, but I want to focus with the NQ right for now. So I have market open, right? The main trend, the overall trend, the intermediate time frame trend is down, right? But right now, due to the fact that the dollar was dropping and the yen was flat, I'm not 100% short right now. So I want to be open to to the fact that if the dollar hold this area, right, where it is right now, yes, I will be biased to the short side. But what if the dollar started to break down? If the dollar started to break down, I will have to reassess all my analysis and try to see if I can long this. For those who don't know, these blue lines, blue dotted lines, are overnight high and overnight low. It's a pretty big range from 12,637 to 12,343. So I would not be impressed if we don't break either of these lines, because the range is very, very large. So what I like to see is every time frame I can get into, like 30 minutes, 40 minutes. I have the 7-minute, I have the 3-minute, I have the 1-minute. And what I'm looking at is clues or patterns in every time frame. So the way I trade is that, alright, right now I'm somehow leaning to the short side, obviously, because the market has been dropping, and we have had some, kind of like liquidation type of days last week, and today looks like the same. Like everything is going down, either metals, crude oil, all the risky assets are going down, and bonds are holding. So when it's a pure risk off day, I want to see bonds going up, right? Bonds are not going up, but they were going up. They were going up in the morning. They were going down in the morning. Now they're retracing to the upside. So bonds are being bought right here, right? And we can see the 10-year yield, how it was at 320, right? And now it's 312. So that means the bonds has been bought. If the dollar holds, yen holds, and bonds being held right there, that's a risk off day, right? So if I'm leaning to the short side, I want to see some formations be created here, so I can, this is a very obvious example of what I do, but and I want to say this: trading is risky. Please don't check my trades. This is a very personal thing. This is just for educational purposes. So what I do is I will expect something like, alright, I will expect like this, and then I retest, and then I'll take it down, right? Or to the long side, I will expect, alright, this created a zone, then I want something coming back, the price coming back to my area, and then I'll take it long, right? That's basically what I do. As of right now, it's been in the same range since it opened, right? I want to see what the internals tells me. The internal tells me at the open was extremely leaning to the short side. The majority of the stocks within the index are dropping, and that's obvious. The index is dropping 1.5%. Yeah, the majority of stocks in the index are dropping, but I can see here in the tick chart some deep buying. So there are some buyers coming into the market. And what I need for me to validate the area, right, is a leg out. What is a leg out? All right, I want to see some consolidation like we have seen here, right, since like 840 or 850, right? So I see some consolidation here, and then I want to see an explosive move out of the zone. What does that mean? An explosive move out of the zone for me is lack of inventory. No supply. So no supply means if the price comes back down, is the point where buyers are willing to buy and sellers are not willing to sell. So that means the price has to go up, right? If the price goes up to the area where the sellers are willing to sell, then all right, then the price will stop and it might drop, or we could absorb all those sellers and then continue to go up, and so on and so forth. And it's the same for the short side. I want to see a consolidation area and then a big move drop. So when it comes back to the area, same area, I would trade that same area. I want to say this. I'm not a swing trader or an investor as of yet, but I do sense this very much. Like when the price comes down, it attracts a lot of buyers, right? A lot of buyers that are on the sidelines waiting for the price to drop are being attracted to the market every time the market drops. And last week we had a pretty big drop. We had 2 days, like Thursday and Friday. So remember, guys, every time a stock goes down, it becomes less risky, right? So more buyers, more of the smart buyers are attracted to the market. Retailers, they buy when things are going up. Like big money, they buy when the things are going down. So this is a very, very important mindset to have. So right now I don't have any supply yet because everything is overnight, and if something that I don't take overnight is a supply. I could take a demand overnight, and that's just my personal election. There are some people that want to trade these zones overnight. I preferably wait on these zones. Now, if it was a demand zone, then yes, I will try them. A supply, I rather just waiting for a supply to be created within the RTH, regular trading hours. I have 4 more minutes to go in this candle, and it's within the area. I do have how much is my risk today? My risk per trade today has to be $324 with 8 cents. So all right. So with that in mind, I will have to adapt to risk no more $324 per trade. And for those who don't understand what is that, I do assess what is my, based on my previous numbers. I do have a spreadsheet that we created here in the office just to assess how much I can risk per trade based on my winning rate and my analysis. And that is one thing that I do encourage to everybody that trades, that they need to be aware of what the risk of ruin for their account is. We're gonna leave the market for now. We're gonna wait for it to give us a nice area to trade from. We don't want to be rushing into trades. That's not what a professional trader does. So what a professional trader does is just waiting for the right setup. And sometimes you might think, wow, so I have to wait till this thing comes down to these areas? That's not gonna happen. Well, you'll be impressed how many times that happens. So you feel like you want to jump in right now, just wait for the next one. If you look, one thing that it really works on me, used to work a lot. Like I used to choose an area, right? Or let's say two areas, and then the price came to the first area, I would just wait for the second area, regardless. Like it was more like something that I wanted to try, right? But it worked on me. Like it developed a little bit of my patience. My patience. Look, right now the 7-minute is just sideways. It looks like it wants to go up. Like I'm not very bearish as of right now. I want to see what the dollar's doing. So the dollar went up to the supply zone from New York up in. So it's yet to see if it's gonna pick a direction. If it's gonna come back or it's gonna keep going up. And I'm watching the dollar very closely because is one thing that I love to watch because it gives you clues of what the market could do. And what I see here is correlation. Now, correlations is not causations, right? That doesn't mean that the dollar cannot go down and the market cannot go down. That's entirely, within the possibilities. But the majority of the time, they're inversely correlated. If I see this, right, this is like the zone that is being created. If I get to see this, I could do that, like here. You see? Now, one of the most difficult things about trading is the timing, right? So this is a 7-minute chart, right? This is not very bearish as of right now. The 3-minute, I could argue, yes, the 3-minute is showing some weakness, but it's not even breaking this area. If you guys see here, it's not even breaking this area. What if this comes down here? Oh, yeah, so this area was not valid, right? But for now, this is not very bearish. The 7-minute can easily close here, and this will be a very bullish pattern, like this, and then like this, and then like this. So I'm trying to have if-then statements along my trading day. So alright, if this does this, then I'll do this. If this does this, then I'll do that. And we do appreciate your comments. We can, answer the questions that you guys might have. Also, remember to share. This is a pretty, fairly new channel, but we want to grow it, and we need you guys to share it. Only and only if you like, please press the thumbs up button. Alright, so the 3-minute closed. Right, the 3-minute is showing a lot of weakness. Let's see what it does here. The tick chart, pretty weak. ADQD or ADD chart, very weak. So right now, this entire zone is around
37 points.
Yeah, $800 risk approximately. So for me, it's not something that I can take, right? So what I can do is this. I can go ahead and measure my risk, right? And my risk is around $328. So let's do 310, right? And we move over here, and then we put a line right there, and I will say, all right, so this is where I can sell this thing, because one of the things that is non-negotiable is the invalidation point. Let me mute myself. This does not work, right? Just give it two minutes. All right. So what I've said, right? I've said the 7-minute can easily close around this point, right? And if you figure this is a drop of what? 81 points. That's a big drop. But that big drop can be turned around in just 1 minute, and I'll show you guys why. Because the ATR, we can just put it visible here, the ATR for the last 10 candles on the well, figure the 3 minute is 47 points, so let's go down. The 1 minute is 33 points, so in average this can be turned in 2 minutes, right? So that's why it's so important to have those numbers, you know, fresh in your mind. All right, so if I see the retracement to the upside, I will not be taking this trade for the fact that if the 7 minute gets here close to, you know, its closing, I will not be taking this trade. So I want to see the open of the candle and being here on the first or second minute of it, so I can have enough time for it to become a very bearish candle, right? But a candle that is bullish and it has just 1 minute left, it's not very probable that it will turn around, right? And that is just me trying to time the market. And guess what? Timing is very, very, very hard. So we see some of consolidation there. The 3 minute is a pretty, you know, fairly young candle. There's 2 more minutes to go. 7 minute is almost 50%.
And we just got a new 5 minute, and it's the last 5 minute in this first hour.
And the 5 minutes is just crap. It's just it's in a huge range, right? So if you are not trading either share bars or second bars, this is pretty hard to trade because it's a very long range, but it hasn't. Now we just have the new. We're gonna have the first half hour of the, you know, trading day. So the zone is working, right? I would, you know, I would love this type of zones. It's working so far, but it was not was not within my risk parameters, right? because I have no way to know where this thing is turned around inside the zone. I have no way to know. So you say, Franco, but why you didn't enter in this 502 line, right? Because for me to enter there, I will need to risk all this, right? That's $750, right? $750 for this account that I have right now. If you want to grow the account and not only grow it, but if you want to not break the account, you need to be aware that you have to take limited risk. It's not unlimited risk. We could have unlimited rewards, right? And we will talk about that later in this channel. But you will have to have limited risk. And what gives you a limited risk? All right, you have a dollar amount that you risk per trade, right? And you have a dollar amount that you risk per day. For me, in this account, is $1,000, right? Per trade means that I cannot, if I want to trade just one trade a day, I could risk $1,000 per trade per day. But what I've said before is that every single trade is a roll in the dice, right? If you start rolling the die, you have no control over it, right? So do you want to just roll the die every day once and try to hit 6? It's pretty hard, right? So what I do is I break that in 3 rolls, right? Meaning 3 trades, and then I have more, probabilities in my side. Why? Because of the law of large numbers. If I trade 1,000 times, I could tell you, look, I won 40% of the times and I lost 60% of the times, right? But my account grew 300%. Why? Because on those 40% that I win, I don't win 1-to-1. I don't risk 300 to make 300. I risk 300 to make 1,000. I risk 300 to make 1,500, right? So this type of trade, this trade for me was around 4-to-1. So I'm expecting this to drop 4 times this thing, and I can show you guys. 2-to-1 is 426. We barely went 2-to-1. Yeah, no, we went 2-to-1. So 4-to-1 is even better because it's before the overnight low. So I don't need to break the overnight low for me to trade this thing, right? So yeah, that was our area. I couldn't trade it because my risk parameters were not within my numbers. And like I was saying, like I could expect this to turn anytime within this area, right?
10 a.m. I did take it. Went 2-to-1.
You're already 2-to-1.
Yeah, I'm out. It went 2-to-1.
Yeah.
I took it on micros though. Very nice zone.
That's another thing that I could do. Is take micros, but between you and me, I don't like micros. Like I rather just pass this trade. Like we'll have other opportunities. It's not only one opportunity per day. So the market is minus 2%. right? The ES minus 1.8%. Those are pretty big numbers. Now that I don't have any like area close by, I'm gonna go over some of the companies that I'm watching on my some of the companies that I'm watching on my following on my watch list, and I have Coinbase dropping big time, 11%. And Bitcoin is dropping almost 9%. This is a low. No, it was actually lower. It was actually lower, like 1% more. So we are experiencing some of the liquidation. There's a lot of leverage in crypto space. So when things fall apart, the most risky assets are the ones that start to to drop faster. I have Matterport, I have GME, that's GameStop, all of them dropping 8%. Affirm, Square, Airbnb 6.5%, Toast we have 6%, Neo. EV are gonna start suffering because a lot of big investors are getting out of Rivian. So then we have Tesla minus 4%, Carvana minus 4%, Python minus 5%, Spotify, Roblox at 26. I wanted to buy this at $100. You know that, right? Thank God we got into like a bird type of market, so I said, all right, if the market falls apart, this thing is gonna be a lot cheaper for me. Ricardo, micro is my level. Bro, you can get bored of trading micros.
Don't listen to him. Micros is also my type of level.
Micro is good. Micro is good too.
It's an excellent way to learn.
Yeah, of course. It's definitely a cheaper way to learn. But for me, because I want to draw in the regular mini contract, just go to the micro chart and then place the trade and stuff. This is like complicated. I just rather stick to this. Boeing making fresh lows.
Franco's certainly at a different level, but I took 3 micros, scaled out at 1R, scaled out again at 2R, and left my third contract for 3R, but it came back and stopped me out at 1R, so made a 1.5R on the trade, $289 minus the commissions. Not a bad morning.
No. So this is 2-to-1. My target on this was 4-to-1, which is 12.3, 49.50.
And I do believe it went to 3-to-1, but it came back to get my trailing stop before it went to the 3-to-1.
No, 3-to-1 is 3-to-1 is 12.388, 382. No, it went fairly close, but no. Look, it's just holding there, right? It's a huge range. Now, what the internals are telling me now, alright, now the internals are showing a lot of weakness. ADQD making, well, it hasn't made a new low as of yet. but the tick chart is holding on the negative side of the chart. If we have another type of liquidation type of day today, this thing can roll over because there's a lot of leverage in the market. And if I have time today, I will go and visit what the level of margin in the stock market, what it is right now. It's around like 800 or 900 billions or something.
I was marking off the weekly charts on everything at home over the weekend, and there really wasn't a good chart to look at as far as a positive outlook.
Yeah, the most explosive move that I have in that area, so we're visiting areas from August of 2020 right now. We're right there at that level. So the most explosive move that I have is around 11,000. 11,000 means like 10% more to the downside. That's very painful.
Yeah, it's about 11,000 is about 33% from all-time highs.
Yeah.
On the Nasdaq.
We're about to hit 4,000. That's 20% for the 4,000 level is 20% for the ES, right?
Yeah. And my weekly chart, I had it marked down as far as 3,400.
3,400.
Which is about 35%.
No bueno.
No bueno at all. Basically to the highs pre-pandemic. These indexes seem to be gaining a little bit of impulse to the downside. The Russell's broken its overnight low, and the ES is trying to test it right now. And like Franco was mentioning earlier, the market internals are not good for either of the markets. The ADD is well in the negatives 2000s, and the tick on the NQ is making an extreme low right now, as well as the ES just made an extreme low. You're getting quite the push. And that is now most certainly 3R on that trade.
Yeah. Now, what I'm asking to myself is, all right, how do I get into this thing? Right? So I'm gonna go ahead and, all right, I'm gonna take this short and 406. What time is it? 10:10, right? 10:10. There you go. I want to see this thing.
Order submitted.
It's $290, right? Oh. It's not showing up here. What happened? Oh. Wait 1 second, guys. So I'm going to show for a little bit my internals, right? I'm going to change this to yes. Alright, so I can show it. There we go. I'm about to get in short. Let's see how this goes. Ooh. Oh. Same as it. Alright, good. I'm about to. Alright, I'm in it. I'm in it short, right? So the internals are showing a little bit of holding there. So I'm already 1-to-1 in this trade. Let's see, did I go 1-to-1? Did it go 1-to-1 yet? Okay, new 3-minute candle. Now it did. So now it did go 1-to-1. I'm gonna move my stop to break even. Right? And I'm trying to get 3.5. Oh, they stopped me out. Break even in no time. And it was like more like a spike. Damn. You see that, George?
Yeah.
They grabbed my order. They grabbed my order. Huh?
It's getting quite volatile right now.
Wow. Unbelievable. There you go. It's gonna go through it. So I was here. I was making 1-to-1. I moved my stop break even. I was stopped out. But I still like the short big time here. I want to see where I can find another opportunity. If this thing does not break the high of 263, I'll be taking this short.
The tick on the ES is making an extreme high, although on the NQ it's only making it back to the 0 line. Oof! And wow!
What
a drop that was.
Yeah. Now remember, every time it goes down, it's hotter, and it's harder for me to take shorts, right? Why? Because we have these kind of spikes. Like I was 1-to-1 here in no time, and then in no time it reversed. So it is what it is, guys. You have to live with the fact that you have to have a plan and whatever. If the plan works and you trade it enough time, then you'll be making money. If the plan does not work, then yes, it's worthless for you to follow it, right? Well, how do you create a plan? That's the $1 million question, right? So for me it was, all right, I'm gonna trade the best I can, the most consistently. All right, the most consistently was, all right, I'm gonna see this picture in the chart, I'm gonna trade a short. I'm gonna see this picture in the chart, I'm gonna trade a long, right? And then you work from there, right? You start measuring your trades. Okay, how much money did he make? How many trades you missed? What the missed trades make? Like how much did they make when you missed it, right? And then you start collecting data, and then you go ahead and say, oh, wow, every time I choose this one, it went 5-to-1. And then you start taking those trades, and then you focus on that setup. That's my setup. That is my setup, right? And then you find another one, and you include it in your plan. So trading is a thing like trial and error. I've told George, we're scientists. We're trying to try and test whatever we find. in the chart. Alright, I see the market holding there, so, and I want to go back to the dollar and say, alright, dollar, what are you doing? And the dollar right now is going up. It went up enough to encounter some supply. So if the dollar continues to go up, right, I will expect this market to keep rolling to the downside. We have crude oil minus 3%. We still have gold dropping. The VIX is plus 10%. Even though it created a high here above this candle here, the internals are showing weakness. The internals are showing more weakness to come.
connection lost.
Yeah, I'm out of data. What's going on?
No.
Yeah, I got disconnected. You?
No. And only your Ninja did, because...
Yeah, trade station is still on.
What account? Oh, the one-up?
One-up?
And is one-up rhythmic?
Yep. Yeah, I go frozen here. I don't know what's going on. I don't have data on my Ninja. Rhythmic. Take over for a bit so I can reset my Ninja.
No problem. So here we're looking at the market internals. I like to look at the market internals for the ES and the NQ. In this left-hand column, we have the advanced decline line for the ES and the tick chart for the ES. You'll notice that the tick chart on the ES has basically been hovering below the zero line all morning long. Obviously negative sentiment. And the ADD is at negative 2,184. Also very negative sentiment. It practically can't go much lower than that. The lows are really 2,500, and we're at negative 2,100, almost negative 2,200. Though it has trended up a little bit this morning, I mean, the sentiment is definitely negative. I wouldn't consider this bullish until it breaks the high, until it gets back above the negative 2,000, and then maybe the market may want to recover the rest of the afternoon. But so far, nothing but negative pressure, especially on the tick chart, and then here the same on the NQ. You can see that the NQ is down at negative 2,700, and the tick has also been hovering below the zero line all the way down. It's really been down as far as negative 900, so it's basically been between the 0 and then negative 900 all morning. Certainly shorts are in command of the sellers, are in control. Here I have the VIX, which is on this 15-minute chart's really just been kind of sideways for the last hour. Hasn't picked a direction. The dollar, since the market has opened, has decidedly been going up. It was essentially sideways in the overnight. In the London session it dropped, but we're back above yesterday's closing.
Yeah, I'm ready.
And US government bonds well above 3% now. And it doesn't look like it wants to slow down. And with that, we'll go back to Franco.
Alright, now I got, for some reason, my platform was frozen. But I'm back up. So yes, this area that I wanted to take initially didn't take it because of my risk parameters, right? Ended up working for now. My ultimate target was 4, right? So we're getting close to that. And the good thing is that you don't have to go through the overnight low to get to this target. So, my second trade, I was 1-to-1, stopped out break even. Now, I was not going for 4-to-1, but 3.5, and every time the price goes even more to the downside, I am more and more cautious about where to put my target line. because, like I've said before, every time the market goes down, it attracts buyers. So the more it goes down, the more strong or stronger are the retracements, right? So I don't want to get caught on that, and not that doesn't mean I'm gonna lose the account if I get caught on one of those, but the more you know bearishness we have in the market, the higher the spikes, right? Stronger the spikes. So why I want to take a low probability trade, right? I want to live with the higher probability, type of scenario. We have a new 7-minute, right? And this first 7 minutes, like the first 1, 2, 3, even the fourth, the first 7 minute shows how the deep buying goes on in the market. Like people were just waiting for this thing to open so they could buy the dip, right? But sellers are in control right now. It looks like we're in a bear market. We're down 25%, but inflation is hurting the economy big time. So the Fed want to put the brakes on inflation. Putting the brakes on inflation means that the risk-free rate goes up. Risk-free rate going up, risky assets go down in value. Because investor wants to go to a safer instrument, right? How much do you have to pay an investor to be in stocks right now? So if you think about that, if you think how much you have to pay an investor to bring money to a risky asset, right? You have to compare it with something, right? How much is risky, how much is not risky. So we have the risk-free rate. The risk-free rate is a 10-year bond yield. 10-year bond yield, right? If the 10-year bond yield goes up, stocks comes down because people want more for a risky asset. People say, all right, I want to go to stocks, but instead of getting 20% a year, I want 40% a year because right now we're in a very risky environment, right? And it makes a lot of sense. It's common sense, right? Who's going to bring money to a risky asset if they can go to the 10-year bond and get 3.5%, right? I'm not saying 3.5% is very good, right? It's not, but it can be 4, 5, 6%, right? And then what happens to stocks? Stocks go down because guess what? They become riskier, right? So they have to pay more in proportion to what the 10-year bond is paying. That's what the majority of people don't understand. Now, where's the yield right now? It's not only that the yield are going crazy. It's not only that. It's the speed with what they're going crazy. Actually, the yield is dropping right now. The yield is dropping, so we might have a type of risk-off configuration there, yeah. Yeah, so the 10-year is up. The 10-year bond is up. The 30-year bond was down big time, like more than 0.7%. Now it's flat, meaning bonds are being bought. Dollar goes up, yen goes up. So right now we have the perfect storm for a risk-off day. And indeed, look at the market. VIX is doing. It's another clue that we need to follow. VIX is steady above 30. 1, 2, 3 days. And it makes a lot of sense, like crude oil is going down 4% almost. This is the third day in a row for liquidation.
Yeah. And that is now.
This thing can get ugly this week.
Everything except the Dow has broken the overnight lows.
Yeah.
The Dow is.
Yeah, it's
holding steady. I mean, it is quite down on the day. It's down
1.5%.
500 points, but
yeah,
still hasn't broken the overnight.
This YouTube channel has been a lot of fun for me because I've missed a lot of trades just because I want to talk and I don't focus enough finding trades, but also has helped me to keep more discipline because I wanna choose the best area to trade from. Okay, what the market internals is telling me, okay, ADQD definitely, no doubt, is very bearish, right? Now we have the tick chart. I want the tick chart not going above 200, right? If it goes above 200, I will be more neutral. For now, I'm very bearish. My long-term demand in NQ is 12,170.
Is what?
I have a long-term demand right there, 12,170. That is pretty much aligned with a POC that I have there. Depending on the type of trading that you might do, but for me, less is more. I just need to get one good trade. One trade. It's not even one good trade. One trade. Right? If I do this one trade, I'll be done for the day. Even for the week, I might take trades that make me my week. Yeah, market is pretty weak. Wow, it's amazing how this thing can move so fast, brother. We're down 25% from the highs. How much is it? Damn, 26%. Maybe you're even lower.
Sell the rallies.
26% from its highs in November, I guess. Yeah, 4,000 points. And the ATR extension is still 150 points more to go. So if I scrunch this charge a little bit, right? What I can do is this 30. So if I do this from here to here. Yep. 300 more points to go if it's gonna complete the ATR. Which I doubt it. This will mean a minus 6% or minus 5.5% today. I doubt it. But guys, market has taught me that anything is possible. Anything is possible. I think with this, I don't have a zone up to like 12,381. You could take this. We have the overnight low. That's a very sensitive point. We have here the 3-minute shooting up like pretty hard. This is a type of like short covering move. So what we want to see here when it gets to this area is some exhaustion here. How do I get exhaustion? For those who don't know, I want to see an exhaustion like overextended tick, right? And probably a higher volume. So I have a higher volume bar already in this 3-minute, right? That means buyers are exhausted here. We want to try to, it went to the overnight low and a lot of sellers came in to stop the price and it created this higher volume candle. Let's see what it does here. Remember, when it drops, a lot of short sellers are involved. Short sellers, to close their positions, they need to rebuy. To rebuy, to rebuy, they need to cover, right? And every time they do that, it creates these spikes, right? It went from 300 or 295 to 340 in 1/2 minute. Two more minutes for this 7-minute candle to close.
We just got a new 15-minute.
And the 15-minute close, very, very bullish though. You reversed all the drop. One of the things that I've learned very much this year is that we don't really trade the markets. We trade what the Feds do to the markets. And that being said, in this move, we do not have the Fed backing us. So that's why I do think either the markets are going to break down or the Fed is going to change its narrative. If the Fed changes its narrative, then we'll have to keep buying the dip, right? But for now, just sell the rallies. I have this area 381 1 quarter. I'm waiting there to see what the internals do. Alright guys, like 10 to 11, this trade doesn't seem like it's gonna get filled anytime soon. So I think we're gonna leave it like this. Like I said before, if I do trade another trade, I will record it and I will post it later, like every day. But I haven't posted anything because I haven't taken any trades outside of these videos. So I'll see you guys tomorrow. You have any comments?
Yes, sir.
All right.
See you guys tomorrow. Have a good one.
You too.